live. And
Okay.
all right, guys, let's prepare to go. Graham, your camera.
Yeah.
Hello, everybody. Thank you for joining us today. My name is Arslan Abbasi from Aventine Lab, and we're joined by our beautiful and expert-minded guests, Graham and Kayleigh. We're hosting today a webinar on client risk assessments and source of funds, two of the biggest issues when it comes to legal compliance for law firms. And today we're going to provide some insights and tips and break down the topic for you so it can serve as an educational session. I'll pass to Graham, who's going to introduce himself, and then we'll jump right into it.
I'm hoping that Kayleigh can introduce herself.
Yes,
first.
of course.
Okay, thanks.
Go ahead, Graham. Sorry, Kayleigh. Sorry.
No, that's all right. So, hi everyone. I'm Kayleigh Smale, and I'm the founder of Smale Compliance. So, I've spent over 13 years in risk and compliance working with law firms to try and make anti-money laundering feel a little bit less daunting and hopefully even a bit fun. I started out as a conflict and AML analyst in an international law firm before becoming a consultant helping firms with their compliance needs. I then had a little bit of a gap year and decided to go into legal tech as their AML subject matter expert, which helped firms streamline client onboarding. Now, through Smale Compliance, I support law firms with audits, training, policy work, anything in between. Always hopefully with a practical and down-to-earth approach. I am a true AML geek, as most people who know me will know that, and I can honestly say that I really do love what I do.
Thanks, Kayleigh, and thanks everybody for joining today. I know you've given up some of your morning to do this, and there's so many on the call. So, Kayleigh, we better behave ourselves today.
I'll try.
Before I introduce myself, perhaps I can briefly introduce the company that I work for. Just to give some context around Amiqus, it was founded by Callum Murray, our CEO, in 2015. We really do pride ourselves on forging trusted partnerships with our clients. We are one of the fastest growing tech businesses in the UK. We've been in the Deloitte Fast 50 technology cohorts, and we're certified by the government and partnered by regulators and professional bodies such as the Law Society of Scotland. And we work closely with Newcastle and Birmingham and Leeds Law Societies down in England and Wales too. I guess being trusted, fast and accurate, along with ensuring privacy and accessibility, are absolutely core to what we do. It's so important, and we are exceptionally proud of our record in this regard. We're relied upon by 9 out of 10 of the biggest law firms in Scotland and an increasing number of firms in England and Wales to do a wide range of AML checking across clients and employees. Our data is sourced from gold standard providers such as Onfido and Comply Advantage and TransUnion, well known across the compliance and financial crime industries. We've now powered more than 3 million checks to help people access legal help, get fast financial advice, access financial products, move homes or jobs. Excuse me. Okay, about me. Well, I recently joined Amiqus in December of last year from my former position as head of AML at the Law Society of Scotland. The LSS, as you may be aware, are the AML supervisor for the Scottish solicitor profession. I was 8.5 years at the Society, putting together and building out the supervisory inspection function and processes there. I was also a member of the Legal Sector Affinity Group, or the LSAG, across this period. I'm sure many of you are aware of that group, and chaired the group responsible for the extensive 2021 rewrite of the LSAG guidance, the HM Treasury approved AML guidance for the legal sector. I also authored extensive parts of that guidance in conjunction with colleagues at the SRA, the Law Society of Northern Ireland, and the Law Society of England and Wales, including the sections that we'll talk about today, risk assessment and source of funds. I was chair of the AML Supervisors Forum, which works across all 22 professional body supervisors, along with HM Treasury, HMRC, law enforcement, and so forth and so on. As you'll imagine, I've worked very closely over the years with legal practices of all shapes and sizes on AML and economic crime issues. So hopefully I'm well placed to offer some thoughts today on tackling these in the context of your own practices. Okay, so let's talk about, first off, Kayleigh, let's talk about why source of funds and risk assessments matter. If I start with this, and many folk will have heard me say this before, I think understanding source of funds and source of wealth where appropriate is probably the most important aspect of AML compliance in the legal sector. It's at the very heart of good quality due diligence AML control. If there's one thing you do right in your AML checks, it's this. If anyone has heard me speak about this topic before, they're probably sick of me saying that I can verify the identity of myself, Graham MacKenzie or Kayleigh Smale, or anyone else for that matter, 10 times over, or verify the beneficial ownership of a company using umpteen different sources. But will those checks tell me if they're money laundering or not? Well, it may help, and verification is important for so many other reasons, not least for reporting correct details to the authorities if need be, or for effective screening. But fundamentally, are the assets or the money that are involved in my relationship with my client or the transactions I undertake with my clients possibly of criminal origin? 9 times out of 10, you're never going to answer that question with absolute certainty, but undertaking those appropriate source of funds and wealth checks will get you closer to that truth, and in order to make the right risk-based decisions. In the legal sector, how did the client accrue the funds for a particular transaction or conveyance, or where does the funding for the company that I act for, where does it come from? And in the context of higher risk situations, how did they amass their overall wealth? Kayleigh, you've got strong thoughts on this as a fellow AML geek. Have you any thoughts? I'm aware they, for example, are placing an increased emphasis on this in much the same way as the Law Society of Scotland has done in the past also.
Yeah, just to hone in on your point though about how source of funds is so important, and I always remember Amy Bow, I don't know if many of you might know her from Till Compliance, she always states that baddies live somewhere. So, you know, they're going to have a passport, they're going to have a utility bill, and they're actually going to be ones that are real. So it's really difficult for you just by ID, and yes, definitely, you know, you know who they say they are, but it's really important that actually looking further into the matter, and source of funds and source of wealth is a really good way for you to spot whether or not there is going to be money laundering going on. So we all know that firms are under pressure from the SRA, and just last week, the Law Gazette reported on another 3 firms who'd been fined for AML failings. So last year, the SRA carried out a thematic review on client and matter risk assessments. And following this review, they offered some guidance and some templates. And this did help. And the figures show that firms within England and Wales went from being 49% compliant to 88% compliance within a year. So that's a 39% increase, which is absolutely great. The SRA's annual report also showed, so back last year, that 25% of cases they reviewed lacked adequate evidence of source of funds checks. Many firms either relied solely on bank statements or didn't make checks for long-standing clients. So the next thematic review is going to be on source of funds, and the SRA during their on-site visits have specifically been asking about source of funds and requesting specific evidence of source of funds checks when reviewing files. And this also includes like a breakdown or a summary of the source of funds. So they don't want to just see the evidence. They're saying, we want to know that you've looked at it. We want to know that you've checked it. And this is where your client, your matter risk assessment comes into play. So it's really important that there is a focus on source of funds and source of wealth within your firm.
Yes, and Kayleigh, absolutely. And it's the same up in Scotland, Law Society of Scotland, certainly when I was there, and I'm pretty confident that that will continue a real focus on source of funds and wealth because it is so important. And if you think about it in the context of the SRA and the Law Society of Scotland's position in terms of one of its duties is to protect the public, etc., that goes some way towards that as well. So it's all wrapped up. It's really important across the legal sector, but actually across the regulated sector and financial services, increasingly so as well.
Yeah, it's about the why as well, isn't it? So I think a lot of staff within law firms forget the why. And I always start my training off with, why do we have to do AML checks? And it's always, oh, because it's the law, because we have to, because we don't want to go to jail. Yes, they're all very important things. But why is it the law? And I just get blank faces. I'm like, because it's bad. Because, we want to be able to stop this from happening. So I think, sometimes as well within law firms, staff don't really understand why they're doing what they're doing. And I think that can cause issues as well.
Yeah, absolutely. It's about the underlying criminality that feeds money laundering. It's the drugs on street corners. It's the nail bars and the human trafficking and the human misery that goes on underneath it. So it's absolutely right to point that out. Before we go any further, perhaps, Kayleigh, I'll go into a wee bit of detail, some of the basics around definitions of source of funds, source of wealth. Unfortunately, the regulations themselves do not define source of funds or source of wealth. Indeed, maybe perhaps somewhat unhelpfully, source of funds is mentioned specifically only 3 times in the 2017 regulations under ongoing monitoring requirements in respect of doing business with certain high-risk jurisdictions and in respect of doing business with politically exposed persons, PEPs. And source of wealth is mentioned only twice regarding high-risk countries and PEPs. This is where the government-approved guidance supports the regulations, and that's colour. That is the LSAG guidance. If we look at the source of funds first, the LSAG definitions were derived, by the way, from the International Financial Task Force definitions as well, just to give a bit of context there. Source of funds refers to the funds that are being used to fund a specific transaction in hand, i.e. the origin of the funds used for the transactions or activities that occur within the business relationship or occasional transaction. LSAG then goes on to state that the question we're seeking to answer isn't simply where did the money for the transactions come from, but also how and where, and this goes to your point, Kayleigh, as well, where did the underlying rationale, how and where did the client get the money for the transaction or the business relationship? Importantly, LSAG thought it was also important to clarify the following. And we'll go on to this in a wee moment or two. I know it is not enough to know the money came from a UK bank account. And we'll circle back to this later on. I know Kayleigh and I both have pretty strong thoughts on this. Source of funds then means establishing the provenance of the particular funds for use in the transaction. In other words, it's not just about the method or means of remittance or indeed collecting bank statements. It doesn't help getting those remitting account details, yes, but importantly also an understanding of the activity which then generated those funds. Was it savings from employment, inheritance, whatever it was? To be clear, it's not just about understanding the money came from a UK bank account, fine, or obtaining 3 months or 6 months or 12 months worth of bank statements. And again, we'll cover some of that later on in the webinar. It's what those banking statements and other evidence collected actually tells you. Bank statements are, of course, useful, and we'll cover that off in a wee bit. Source of funds. Sorry, Kayleigh, I want to bring you in, but I was just source of wealth refers to the origin of a client's entire body of wealth, so the total assets, rather than simply those funds being used in that specific transaction. It's really understanding the economic or the business, the activities that generated or significantly contributed to the client's overall net worth and entire body of wealth. This should recognize that the composition of that wealth could change over time, and identify any new activities which creates additional wealth. Yeah. So the entire body of wealth, and that is more relevant in enhanced due diligence situations, including where your client is a politically exposed person. Okay, those are the definitions, but it's important to note, and again, we'll talk about this in record keeping, you're not being asked to turn forensic accountant or Sherlock Holmes here, but you must establish and describe and record the originating sources of the client's wealth, along with any main drivers over time. Kayleigh, I want to bring you in. Could you perhaps mention the LSAG addendum that was released around third-party sources of funds?
Yeah, so I think most firms were doing this anyway, to be fair.
Yeah.
But the LSAG guidance that was approved this year states that when you're taking funds, say from Bank of Mum and Dad, then you need to treat them exactly the same as you would if they were a client of yours. So you need to be making sure that you do their ID, you need to be checking their ID, and you also need to be checking their source of funds and understanding their source of wealth. So it's really important to make sure that you have a policy in place for this, because some people might not know that that's the case. I suspect most of your staff are doing it, but if you've got it written down in your policy, then obviously there's no excuse for anyone saying that actually I didn't know that we had to do that. So just something for you to keep in mind. It might be something you want to update in your policy just to make it clear that if there are funds coming from any third parties, you need to be checking them the same as you would as a client. And I know that can be a bit trickier because they're not your clients. But that is going to be the position. So it's really good from the outset for you to have a better understanding, find out from your client where the funds are coming from, and then you can manage expectations by saying to them, because it's coming from someone else, we are going to need X, Y, and Z from them. And we probably will need to speak to them as well. So it's just making it clear so you don't end up with, a load of issues a week before exchange saying, oh, we've got a gifter, we don't have any evidence for them, and then it's a massive rush.
Yeah, thanks, Kayleigh. So you're absolutely right. I think I'd add to that, the guidance says, of course, that the extent to which you should obtain, review, and evidence third-party source of funds is dependent upon the risk profile of the client or the matter. So, for example, if it's clearly Bank of Mum and Dad stuff, well, the threshold of review and evidence is likely lower than if there were, for example, higher risk factors involved, or there may be multiple unseemingly related, unassociated third parties all contributing to the transaction. So I think we need to be clear that it is risk-based. If, and is often the case in this day and age, Bank of Mum and Dad contribute 5 grand, 10 grand to a first-time buyer's property, etc. Well, as long as you can see that family link and you can kind of document it, I think the threshold for understanding that is probably lower than higher risk situations. Yeah.
Yeah, we once had a dentist that was someone's dentist was apparently offering him some money, and we didn't have a loan agreement, we didn't have anything, and it was getting close to and unfortunately the law firm had actually given over their bank details as well, so the money was already in the bank account from this dentist that we knew nothing about. It became a bit of a tricky situation, and we just couldn't understand why a dentist would be offering that sort of money to one of his clients.
And that's a really good point, that in that sort of situation, and we'll go on to practical examples later, but in that sort of situation, you'd want to see, document a rationale why the dentist was providing the funds or some of the funds, but also if there was a loan, was there a loan agreement in place? Depending on the amount of money, if it was 10 grand, well, to be fair, common sense would dictate you probably have some sort of arrangement or even emails, etc., in place saying this. So that's sort of evidence and due diligence that you'd want to perform in those situations. Kayleigh, I was wanting to talk about this source of funds, source of wealth in the context of conveyancing, and then maybe I can go back and circle back and do a wee bit on TCSP or corporate activities. Do you want to kind of add in thoughts with specifically on conveyancing?
Yeah, so property transactions, as most of you know, are assessed as high risk of money laundering because it can be a really easy way to move and layer a large amount of criminal property. And if you don't ask the right questions or obtain evidence to show what your client is telling you is true, then you're opening up yourself to a load of issues. And it happened in the past to a solicitor called Neil Bolton. Google him if you don't know who he is. And he went to prison for 6 months for money laundering offences. And he would have said that he was just doing his day-to-day job. He wasn't in on it with the crooks, but he stopped asking questions. And that's when they took advantage of the situation. And that's why a risk assessment must be completed on every single matter. Even if you've known them for a long time, you're there wanting to assess, has anything changed? Does everything still make sense? Because, the crooks don't always try to launder money on the first matter. They try to get your test. They hope that you'll stop asking questions. And that's when they start funneling that dirty money through the firm. and commercial teams as well. So it's not just your, your residential property teams, your commercial teams as well. Don't forget that if you are carrying out transactional work, you also need to be considering source of funds. And it's something I'm seeing in quite a few law firms that I'm working with, that the residential property team, they have a great process, they know what they're doing. Maybe they're not recording it as well as I'd like them to. But they're on the ball, they understand what they need to be getting. However, the commercial teams don't really have a process to follow. And
Is anyone there?
I'm here. I think Kayleigh was having some.
I'm back.
There you go,
You're
Kayleigh.
back. Sorry, Kayleigh.
Sorry, everyone.
Woofed.
Sorry, everyone.
It's unknown here, but yeah, carry on, Kayleigh. Sorry. Yeah.
Where did I cut off?
Yeah. Maybe go back to where you were on, kind of talking about the commercial teams as well. Thank goodness.
Yes. Okay. Did you just have a panic? Oh no,
No, you're fine. I thought it was me, to be fair, so carry on.
So what I was saying was about the commercial teams. Don't forget that you also need to be doing it. The residential property teams have really good processes, whereas the commercial teams don't generally tend to have them. So I think in the back of their minds, we don't have a policy on source of funds for our teams. So that means that we don't need to do it. And that's not the case. You're doing transactional work. You really need to be understanding the source of funds. And when I do file reviews, more often than not, it's not evidenced on the file, which can it could put you in a really tricky situation if the SRA ever came in, or the Law Society of Scotland. But not only that, say if something happened to you and someone else needed to pick up your file, or even a few years later down the line, then maybe the police come knocking on the door, then maybe the SRA or the regulator needs to get involved. You won't have anything on the file, and that can put you in a really poor situation, especially if it was something that was considered. So I will interview staff, I'll review their files, they look pants, don't think they're doing what they need to be doing, and then I interview the staff and they're asking all the right questions and they're thinking about all the right things. It's just not there on the file.
Yeah, quite often the case. And I think certainly it's a good point to raise on commercial, because in commercial property transactions, they can quite often be a lot more complicated or complex than residential as well. And the sources of funds can move. A commercial deal can take months. It can sometimes take years to go through. And in that time, the sources of funds involved in that transaction can change multiple times. One minute it can be coming from across here, next minute it can be across there. Parties to the transaction move in and out. And that's where the complexity arises, and the underlying source of funds is much more tricky to ascertain and indeed keep on top of. So I think your point around policies, controls and procedures extending into commercial conveyancing is bang on. It really needs, it's in many ways, it's as important, if not more important, in certain regards than the residential piece that firms do as well. Absolutely. If I might just tap into TCSP, Trust and Company Service Provision and corporate activity, I also wanted to mention source of funds and wealth in that context. In the scope of the MLRs, the money laundering regulations, but also in terms of LSAG guidance part 2B. Now, I joked in some of our kind of intro videos on this, the folk might not be aware there is actually the LSAG guidance, the main section, but there is also 2A, 2B, and 2C, which touches upon, I think 2C is by notaries, 2A is barristers and advocates, and 2B is all about trust and company service provision. Under guidance 2B, that is TCSP activity, under the client due diligence and risk assessment section, it says that the risk assessment for those type of matters should include, where applicable, details of how the entity or arrangement is or has been funded. i.e., if you're setting up or managing a company or trust on behalf of a client, providing a registered office or undertaking company secretarial work, you need to obtain the picture and risk-based evidence of how that entity or arrangement has been or will be funded. To be clear, and the implication of that then is that the requirement to do source of funds checks might apply even if no money is coming through your client account. Where the client is acting on behalf of an entity, whether it's a limited company, buying a property, or perhaps in a TCSP arrangement, it's expected that practices ask questions, review, document at a high level the financial profile of that entity, how it's funded, how it generates its profits. Seeking more verification of this, obviously, as risks may increase, so a risk-based approach, and we'll come on to that in a few minutes. While we absolutely need to maintain some perspective on that, the fact that money may not be hitting the client account, but if you're setting up a registered office or setting up or managing a company, let's not forget about the Proceeds of Crime Act. So especially sections 327 and 328. 327, a person commits an offence if he or she conceals, disguises, converts, or transfers criminal property, i.e. it's really wide-ranging in nature, right, covering a range of activities. And 328, a person commits an offence if they enter into an arrangement or becomes concerned in an arrangement which they know or suspect facilitates the acquisition, use, or control of criminal property. So commercial work, including TCSP arrangements, are clearly included in that. So if I'm in a firm, I'd certainly want to know where the funds which I put into a trust or manage on behalf of a company were derived from, for example. If I'm providing a registered office, what does that business do? And what is the level and nature of the funds which will or have been flowing or will flow through that business? Where are they derived from? If I'm setting up a company which will be used for trading purposes, what are the high-level business plans for that company? Where are they expecting their cash flows to come from? Does it make sense across the wider context and knowledge of the client? Kayleigh, have you anything to add to that?
Yeah, it's something that I hear quite a lot is that they think that they're lowering the risk by not letting the funds go through the client account. And I'm like, I think we talk about the money laundering regulations so much that people forget about the Proceeds of Crime Act. And actually, Section 328, you could be concerned in an arrangement. So the fact that you've drawn up those contracts and you've helped that money transfer, even though it's not gone through your client account, you are facilitating. So it's something that people do, and they think that I get it as well. Well, it doesn't matter because the risk is low because we're not taking the money on, or we're lowering the risk because we're not accepting the money in our client account. No, you're not. The risk is still there. You're actually still facilitating. So I think that's really important. I think, again, like you said, in corporate transactions, that's something that's often forgotten about. And it's something that I've been providing quite a lot of training on recently as well. And I even did a post on LinkedIn about it because it's something that I'm noticing, even from drafting firm-wide risk assessments, sending, questionnaires out to staff, and they're coming back and they're saying, we don't need to worry about that because it's not transactional, even though it actually is, because you're, providing a contract here that's facilitating this money exchange in hands or this property exchange in hands. So I think sometimes people forget that in the background. So really good point to raise there.
Yeah, thank you. So I agree, and we've covered off the basics of source of funds and source of wealth. How about, is it now a good time to dip our toes into how all this ties into a risk-based approach? If I go first on this, and then you come in and interject as well, Kayleigh, please do. Put simply, the higher the inherent risk and the more complexity and risk factors present in the client or the transaction, the more extensive and detailed the source of funds inquiry should be, and the more evidence should be gathered and reviewed. So crucially though, and I wanted to get this point across as well, it's not just about the level or depth of inquiry and evidence, it's about the type of evidence that you collect to mitigate the risks present. So I don't know about you, Kayleigh, but I've seen firms fall down on this before. I've seen it myself when I'm delivering training, etc., where they've gone to town on gathering evidence, or we're doing case-based scenarios and interactive sessions, and they go down the path as per my policy. The policy dictates that I do X, Y, and Z, so I will do X, Y, and Z. But actually what they're missing is this big white elephant that they need to mitigate the risk there in the corner they're not looking at. And actually that might mean gathering different types of evidence to mitigate that risk. So it is situation dependent, if you like, yeah? Because it's all about getting comfort over a client or a transaction and actually mitigating the risk presence, right?
Yeah, and I think there's a reason why there's not a lot in the legislation about source of funds and source of wealth is because it has to be on a risk-based approach. It's not black and white. It's not easy. So whenever I go in and do training, like you said, I have that caveat. Like I'm not going to be able to stand here and tell you exactly what you need to do for each and every one of your matters because it's very dependent on the type of matter that you take on, the type of source of funds there are, like what they're telling you. Does it all make sense? There's so many different factors. And I think even with the review of the money laundering regulations coming up, I sat in one of the forums and they made it clear that there probably isn't going to be a change in legislation on source of funds. It's likely to come in the form of guidance as opposed to an actual change in the legislation because you really need to be looking at it on a matter by matter basis and based on that client as well.
Yeah.
Having reviewed countless files over the years, I've always found that source of funds is the trickiest to assess. And for years, I've been recommending firms include an explanation of how they became comfortable with the source of funds for their transaction, reminding them that actually this is a really key point of your overall risk assessment as well. And I think that's the importance here is, okay, you've got all of this evidence, but why did you get it? How did you become comfortable? And have you evidenced that for us?
Yeah.
And I think they're really important steps in a matter. And it was great. I did some training last month, and it was really lovely to have some feedback that they'd taken on board what I'd said, and they were keeping a clearer record of the source of funds on the file, which is, and just to throw in some ongoing monitoring out there, you're actually evidencing your ongoing monitoring as well if you're making sure that you're doing your risk assessment at different stages throughout the file. So I think it is a really important thing to remember that it is a risk-based approach.
Yeah.
But firms can have set policies on that. So they can have that baseline that they want, and then it then tends to flow into what do we need to do next.
Yeah, I think you're right in that certainly in all the files I've reviewed, both as a supervisor and otherwise, source of funds, indeed, it all ties into this holistic due diligence point. Where firms quite often may fall down is they're doing due diligence, they're assessing risks, but then they're not doing the due diligence which would mitigate that risk, and they're certainly not recording it. And to that point, to my mind, training should all be about changing the mindset, getting people inquiring, engaging the mind to understand the risks and think a wee bit outside of the box in terms of what are the best due diligence steps you can take to mitigate the risks that you're seeing involved in that client or that transaction. I guess the other thing to note also is it goes the other way, right? So where risks are assessed as lower, well, explain why you think they're lower. It has to be reasonable, of course. Note it on your risk assessment. You still need to follow the basics of the money laundering regulations, etc. But then go ahead and do the business, yeah? The whole point of a risk-based approach is that you concentrate your efforts, the firm's resources, across clients and matters and areas which warrant it because they are of higher inherent risk. Now, for most firms, the vast majority of firms, the majority of their business won't be high risk, yeah? So go ahead and do it. You still need to conform to the money laundering regulations and LSAC guidance, but actually the level of due diligence will not necessarily be as high as if you're then doing enhanced due diligence on those higher inherent risk and matters or clients. And what that means then is you can then start to concentrate your efforts and gain efficiencies by really honing in with a really good risk assessment on those matters and clients you believe are higher risk and doing more due diligence on them, which will hopefully free up resource within your firm as well.
Yeah, you're not going to be doing. You're not going to be asking Tesco for their bank statements, are you?
Well, indeed, exactly. At a very basic level, like, yeah, absolutely. And as an ex-supervisor, seeing evidence that the regulated person, the fee earner, the partner, the person in the firm has done this, has then applied that risk-based approach, has applied a reasonable test, if you will, has analysed, assessed that information and the evidence presented, and then documented that rationale. Well, that is key to good supervisory outcomes and effective compliance with the requirements, right? So, yeah. Kayleigh, maybe we should start getting our hands dirty and looking into the more practical aspects of some of this. So, come on, let's talk UK bank accounts.
Yeah, there's this persistent myth that
Yeah,
money
yeah,
sitting in
so,
the UK bank account must be clean.
yeah, you go first on that, and then I'll add my tuppence worth. How about it?
Yeah, and I'm still hearing it now. Some people just assume it's been through a UK bank account, so it's good money. But the reality is around 36 billion in dirty money flows through UK banks every year. And back in 2021, NatWest Bank was fined almost 264 million after taking deposits of dirty money at around 50 different branches. And this actually involved black bin liners of cash being deposited. And in one branch, £7,000 in cash was deposited. And then it turned out that the bank actually laundered around 365 million for this criminal gang. I mean, they must have, they could have walked in with like baddies written on their heads. And more recently, this week, I'm not sure if anyone's seen Monzo Bank. They've been fined 21 million after it onboarded customers who used some interesting addresses. One being 10 Downing Street, we had Buckingham Palace, and actually even Monzo's own registered address as their personal addresses. So it's the UK banks doesn't mean that it's safe money, and there could be a number of reasons. They could have filed a defence against money launderers, so they could have said to the bank, said to the National Crime Agency, "We've got this dodgy money here. Are we okay to proceed?" And they get that defence against money laundering to be able to move that money, and they can't tell you about it because that will be a tipping off offence. And it could be, the National Crime Agency, they do let some stuff go through. They want to. They're building an investigation sometimes. They want to be able to see where the money goes. It's all about following the money. Or it could be that they are just a really terrible bank and they let the bad guys deposit £7,000 in cash at one time. So I think it's really important that to remember that UK bank account doesn't equal okay.
Yeah, I agree. And thanks, Kayleigh. You totally stole my thunder on Monzo Bank there, but that's okay. No,
Sorry.
not at all. So you're absolutely right. Some of the feelings of Monzo, but a catalogue of other UK financial institutions would show that. No, I mean, ultimately, of course, law firms have their own duties under the money laundering regulations. But that aside, no, I wouldn't be putting any onus or reliance, if you like, on banks or financial institutions here in the UK or abroad. And that point, in terms of DAMO SARs, Defence Against Money Laundering SARs, that the financial institution may have put in, yeah, I've seen firsthand that the NCA or other law enforcement bodies will be building a wider case, right? So if, for example, I don't know, like Monzo have put in a DAMO SAR on a client and the NCA have given consent, well, those monies flow through, then they perhaps hit your client account, and then the NCA spotlight's on you. What are you going to do? Are you going to put in a DAMO SAR and gain consent? Are you highlighting this? And if you don't, well, that puts you, unfortunately, in the hot seat in terms of some of the offences under POCA, so you have to be very careful with that. And I would absolutely concur with Kayleigh. You don't rely on it's been through a UK bank. Yeah. Kayleigh, how bank statements can help and how or where they may not help. Let's talk bank statements now. So common I see time and time again is over-reliance on bank statements and failing to probe unusual transactions, etc. on it. Yeah. So how many times as a regulator and otherwise that I've seen, oh, well, they've put 6 months worth of bank statements on the file, one and done, thanks very much, let's go and do the business. Well, no, what do the bank statements say? Over to you.
Yeah, so I spoke earlier, didn't I, about how the SRA found that a number of cases lacked, adequate source of funds. And one of the things was that they raised with firms solely relying on bank statements. In my experience, the reason why is because most policies I see state that staff must obtain 6 months bank statements. And I think that's a really good starting point, but some staff kind of take that at face value. And for me, it's about remembering that there's no point in collecting evidence and just placing it on the file, like you just said. Have you reviewed the bank statement? Does it tell you what you need to know to make you feel comfortable? Is there any other evidence you now require based on your assessment of those bank statements? They're a really good starting point, but actually you may need to go off and get some more evidence depending on what you find within those statements.
Yeah. Okay. So, the perennial question, how far back do I go? Is it 3 months, 6 months, 12 months? What is it? Well, how far back depends on what you're looking for in them, right? A regular source of income from an employer, fine, evidence of regular transfers to a savings account. But there's more to this as well. Bank statements unto themselves don't satisfy source of funds and definitely not source of wealth inquiries. Not to say they don't have their place. Amiqus offers the facility through open banking to connect and draw in bank statement information. And we'll talk about that in technology, the use case of technology in a wee while. But bank statements can also alert you to unusual credits or activities, regular unexplained or say round amount cash credits you might want to see. It's all part of that holistic due diligence picture, the wider picture of the client on personal accounts. Do the statements look relatively mundane with the usual activity? Do the example have salary in, debits to a mortgage, mobile phone, supermarkets out, like mine does and probably yours does, Kayleigh? Or is it cash in, cash out, and very little of what we might call normal expenditure? That's where bank statements can really help build that kind of overall picture of what the client's up to.
Yeah, I've had it before where someone was saving £4,000 a month. At first, we only had the bank statement showing the savings account. Saving £4,000. No, it wasn't £4,000. It was more like £2,000 a month. And I was like, oh, that's quite a lot of money for someone to be saving that amount of money. And then we looked at the bank statements. They were earning £5,000 a month. They were living with their mum and dad, who had then told them, we don't want any money from you because we want you out of our house. So please save as much money as possible. And it made sense. Again, it's going back to the, does it make sense? It made sense that they were able to save that sort of money a month based on what their earnings were and based on the fact that they were living at home with their parents.
Yeah. And their expenditure. I've seen folk earning serious amounts of cash on a monthly basis from a salary, but actually, there's no law against gambling, of course, but they were spending all their savings on gambling. Yeah. Oh, sorry, all their expenditure was on gambling. So actually, when you add two and two together, they may not actually be able to afford that deposit for their house, etc. I wanted also just to, at this point, Arslan, you probably come in just to get everyone talking about this. If you've got questions or comments, please do put them in the chat. Arslan, did you have any chat?
Just wanted to say, guys, this is an interactive session, so please leave as many comments as possible. I know there's been some great comments. Thank you, Lauren. We'll get to them at the end, but yes, please leave as many comments. Graham and Kayleigh are here to help you guys, so this is your time to actually ask questions and get free consultancy, which is what I
Thank you. Right. Okay. So, and also just to mention this goes to business bank statements again. If the company, say, buys widgets from Taiwan and sells into Europe, do you see monies out for purchases to Taiwan or to a Taiwanese entity? And do you see monies coming in from companies or consumers in Europe? I mean, that's a simplistic case again, but that's the sort of activity you might expect. Yeah. Ultimately, though, it's not about just getting 3 months worth of bank statements. It's about reviewing and assessing them in the context of what you know about the client. Yeah. I wondered whether or not I was just adding a couple before we go on to technology. I might just drop in a few other practical hints and tips and source of funds and wealth, and also talk a bit about record keeping. Don't neglect open source internet searches in terms of source of funds and particularly source of wealth. Do a name check and add in as much detail as you have, dates of birth, locations, backgrounds, for example. Is your private client, say, claiming to have built up or run or sold a successful business? Well, the likelihood is there's probably plenty of articles or evidence on the internet for this. not least on Companies House. If you couple that with some other information from Companies House, say sales information or whatever, and you start to build that overall credible picture. Yeah. Again, the expectation isn't to go on to turn full on Sherlock Holmes. It's not. But again, just evidencing that background and financial profile. In checking your non-natural clients, your business clients, is there an online or internet presence? If not, is that something to be wary of? In most business these days, websites and an online presence are an important way of connecting and engaging with customers and the public. Record keeping. Well, Kayleigh, I'll bring you in. Why don't you speak about record keeping, and I'll add in as well. Yeah.
Well, I think we've been talking about it quite a lot all the way throughout, haven't we, really? Record keeping is really important. And I always get asked, how do we do this? Where do we put it? And, it's completely up to you as a firm. But I quite like to bring the record keeping into the risk assessment. So your record keeping, you're assessing the risk of the matter, but you're also evidencing your ongoing monitoring as well. So there's quite a few things that you can do in one go, whilst you're making sure that you have a written record of what you've done, why you've done it, and why you're comfortable with proceeding. And I think that a risk assessment is a really good place to put that information. And you could have triggers. So I know a lot of firms, they will have a trigger that says, right, we do one at the start. Are we happy with everything that they've told us so far? Does that make sense? Yes. Right. Okay. Now we've got their ID documents. We've got their source of funds. Does one, are we happy with all the documents? And two, does their story still make sense? Does everything that they've told us at the start still make sense based on the evidence that we've received? And then you kind of want to do another one. I know some conveyancing teams, they do one before they exchange and before they complete. But just before you do the thing that could be money laundering, make sure that you do another assessment then as well. And that is such a good place to record. Your risk assessment then has all of that information on there. And if you're ever asked, where's your record keeping? Where's the record of why you came to the decision that you did? Even if you get it wrong, you've got that evidence then, and the SRA or any sort of regulator will take that into account. And again, going back to Amy, because I learned so much from Amy always said it's a bit like GCSE maths. You get your your point for your workings out, even if you get the answer wrong, and it will be the same for you if you've made that written record.
Yeah, I mean, certainly it's a bit like algebra. You get, if your workings out are correct, you will get marks for that. Yeah, absolutely. I think it's important to add that we're all seriously busy people in our day-to-day working lives. You have a conversation with the client, you put the phone down, you walk into another meeting, you retain it in your head, but you might not write it down fully, let alone add the context and the conclusion. Well, it's tough, but we all know that an auditor, the Law Society of Scotland, the SRA, or indeed, God forbid, law enforcement would say that if it ain't written down, it didn't happen. I mean, I had the misfortune to have to say that and deliver that message to many law firms in the course of my supervisory career. Let's be clear, record keeping is absolutely essential and a key safeguard. Certainly at Amiqus, we are looking to provide an overall end-to-end system of records so that your risk assessment, your ID&V, your screening, your source of funds, source of wealth information, etc., are all in one place. Time-stamped, readily accessible if you are asked by a regulator, or indeed you need to present something to the partnership, whatever that might be. And that's something that we're really proud of, and it's something that's really important in the context of your compliance as well. Okay, if we go on, that's probably a really good segue into automated tools such as Amiqus and the Amiqus platform to facilitate source of funds checks. Kayleigh, have you got kind of wider thoughts on this? I'll obviously mention what Amiqus does, but have you got kind of wider thoughts on this at all?
Not probably too many more that you'd be able to hone in on, but I think I am really keen for law firms to really utilize technology to help them. A lot of the time I hear people saying like, it's too much work, it takes too long, it's taking up all of our time. And I've even been to law firms before where they've said, don't get to do the job that I actually enjoy doing because I'm spending too much time on all the AML stuff. And I think law firms need to stop being scared of technology, and they need to start utilizing it in a way that's going to support their staff by having really great workflows, by having integrations. There's so much that it can do with the tech stack that you already have as well. A lot of the time I say, well, I know that that can do this because I've seen it before, and they've not really thought of it. So I think, having platforms like Amiqus that can help you with your source of funds checks, like you're not going to end up getting one scanned page of each bank statement that aren't numbered, that you then have to go through 100 bank statements. With things like open banking, it makes it so much easier for you to be able to gather that information and review it.
Yeah, thanks. Okay, so I mean, if I perhaps talk through some of what Amiqus can help with in terms of risk assessment and source of funds, source of wealth. If I start with the risk assessments, well, firms can use our platform and our forms functionality to create and save bespoke risk assessment templates to use in collaboration with their onboarding and customer services teams. They'll create them with you. This then creates a digital space for fee earners or others to populate and capture client and matter risk assessments to then sit alongside, is kind of what you were talking about, Kayleigh, to sit alongside and join the dots with the other elements of AML work, so ID and verification, sanctions, PEP screening, source of funds analysis, and such like. So we've also digitally replicated both the LSS and the SRA client and matter risk assessment templates and the accompanying guidance within the platform for clients to use. And we can also obviously tweak those templates to individual firm requirements. Within the digital risk assessments, there are also markers or flags which can be populated to indicate areas of higher risk or a need for further information or investigation or senior management escalation, for example, along with the functionality to upload documentation or evidence to then support the risk assessments. The feedback that we've had is it's simple, effective, and clear. However, we're obviously actively reviewing and making incremental improvements to this in the back of client feedback, as you'd expect. If I move on to, source of funds, source of wealth, well, like many systems in this space, Amiqus plug into open banking technology to securely and electronically draw back client bank account information and statements for you to review and analyze for source of funds purposes. It allows you to verify clients' balances and transactions and payees, income, affordability in a frictionless way. But is it a panacea? Absolutely not. And Amiqus want to earn your trust in this space. We would never say it is. And I'd certainly urge caution of anyone who says they can use tech to make decisions for you in this space. After all, the firm still must analyze and interpret the information, much in the way that we've described during this webinar. But Amiqus certainly really want to help and support firms by making the process much more efficient, frictionless from you and your client's perspective. And we also kind of allow for manual upload of bank statements or other evidential documents for secure review and storage, where, for example, open banking isn't an option, or for evidencing the more complex or, say, non-vanilla cases where source of funds are not showing or not otherwise evidenced through bank statements. This is really important for record-keeping purposes. I mentioned that end-to-end system of record for our clients. Imagine a space where all your AML records are clearly annotated, time-stamped, labeled in one place to be able to produce for regulatory scrutiny. It's really important to us and to our clients and firms. We're doing an awful lot of work behind the scenes just now, looking at source of funds, source of wealth as well, to make the process better, specifically the analysis piece of it, easier for firms too. For example, by pulling out, highlighting transactions which warrant further review in a kind of a friendly fashion, in a user-friendly fashion for fee earners. I wonder, Kayleigh, if you could share insights into like balancing that manual and tech-driven approach, if you've got any.
Yeah, it is. Yeah, it is a tricky one. I think the balance is making sure that you've got the correct policies and procedures in place so people understand what parts are a bit more manual and what parts are to be done through technology. I think it's also really important for you as a firm to really understand what your technology can do, because having worked in tech for a year last year, was quite interesting that a lot of law firms didn't quite understand the tech that they already had, what it did, what the source providers were, where the information was coming from, and how it could actually better support the firm. So I think it's really important when it comes to technology that you have a really good review, and it's about understanding the limitations of your technology, but also the great things that it can do as well. And I think the balance there is, technology can't tell you as a client. They can give you hints as to whether or not a client is high risk. Like, we can tell you that's a high risk third country involvement. We can tell you this and we could tell you that, but there's always going to have to be a human element of it. And you need to look at all of that data that technology is gathering for you and telling you about this. And you need to then sit down and say, am I happy with this? Because at the end of the day, you're the one who knows the client properly, and you're the one who is dealing with the matter and will understand the matter best. So it's just that technology can do a lot of data gathering for you, but the ultimate decision needs to be done by you or with your risk team.
Yeah, sure. Before I kind of go in on that, Arslan, did you want to come in on anything?
I just wanted to add on the technology side as well, map out the process end to end from every practice area, understand how the conversation begins for sales or between the solicitor and the client, as well as explain to the client the process of what you're about to do with AML. It's really, really important that you don't catch the client by surprise mid onboarding, telling them, hey, you need to do this really intrusive source of fund check. So explain that to them at the beginning, what the process looks like during onboarding, why you have to do these AML checks, and then hopefully that should help you a little bit further on. And before passing it to you guys, I just want to say we have some great questions, but we are going to do a Q&A. So guys, please ask more questions. This is your opportunity. And yeah, there's some really good questions from Lauren and a couple of other great folks here. So yeah, I'll pass it off to you guys again.
Thank you, Arslan. So I agree, Kayleigh, what you were saying about firms need to understand the technology they're using. I wrote the technology section within the LSAC guidance, and that's something that we really wanted to stress. There's no point in putting in systems when you don't really understand them, or you're just putting them one and done. You need to have a basic understanding, at least, of what those systems do, the data sources that they use, etc. For me, it's about making the information simple, accessible, clear for fee earners and others to make decisions on. Ensure this interface between manual and technology, ensuring the key risks. For me, the technology is about kind of ensuring the key risks, the key due diligence considerations are surfaced and brought to attention for human consideration. This is where tech can really help, can make the process more efficient, dynamic, cost-effective. Again, I'd go back to the Amiqus mantras of trusted, fast, and accurate. It's at the core of the product and its development. I can absolutely see where, for example, AI can help with this, and it's something that we embrace. But then again, AML really shouldn't be, and in many cases doesn't need to be, rocket science. For many firms out there, it's about making sure the basics are right, things are simple, cost effective, and partnering with technology that you can really trust and really does what it says on the tin. I would probably just conclude before we go on to Q&A sessions. That's us almost at 12 o'clock now. I guess my three key takeaways, if I were to give those three, we've gone over a lot of ground there, Kayleigh, and hopefully it's been a really useful chat for people listening in. But there's three things. Importance of source of funds. It's at the heart of keeping you and your business safe, safeguarding the profession in general. That is why there's so much regulatory emphasis on it. Please do revisit your source of funds, source of wealth procedures. There's a bunch of information, I'm aware, on the Law Society of Scotland's website, on the SRA website as well. The SRA thematic results, if you like, or paper will be coming out relatively soon. The SRA will use that as an educational piece as well to try and educate the professionals. So by all means, read it, learn from it, etc. It's there to be used as an educational tool as well. Risk-based approach and the tie-in with holistic due diligence would be my number 2. At the heart of a risk-based approach, getting risk assessments right creates efficiency, as your firm can then determine with confidence what is lower risk and what you can spend a bit less time on AML-wise and what warrants more of your time. And also, crucially, what to spend that time doing to mitigate the risks actually identified. This all really ties in with the concept of holistic due diligence, identifying and assessing the risk in the overall context of the matter and the client, including their source of funds. It's something that when I'm doing training or consultancy with firms, it's something that we often go back to because it's really at the heart of it. Record keeping, darn record keeping, not War and Peace, but short, concise file notes, ideally stored if you're using electronic means alongside other AML info. The whats, the wheres, the whys, the when, the hows, time-stamped and signed. If it's not written down, it didn't happen. So vitally important. Kayleigh, have you anything to add to that before we go into Q&A?
Well, I think you've nailed it.
Thank you. Okay, so Arslan, maybe I can bring you back in and we can start hopefully answering a few questions on behalf of folk who have taken the time to dial in. Thank you.
Sweet, let's do it. Let's start with Lauren.
Okay.
And let me see if I can show her comments here. There you have. Lauren Lomas Fitzpatrick asks us, I get asked, why do I need to do an AML check as well as ID check, i.e. collecting ID and proof of address? Any thoughts on that?
Kayleigh, do you want to go first on that? Or?
Yeah, so you are so I don't know, I'm not sure about the difference between the AML check as well as an ID check. So the identity checks are to make sure that the person that you're speaking to is the person they say they are. So you want to be making sure that the ID that they have is real. It's not fake. You want to be making sure that the picture matches the person that's there in front of you. And then the proof of address is basically, really, this is more of a fraud thing. And also, so the police have a door to knock on, basically, or anyone has a door to knock on, for that matter, if anything was to go wrong. So it is more of a fraud aspect as to an actual anti-money laundering issue. We've already said, that, getting a proof of address and, an ID won't stop money laundering, because yes, it won't. But at the same time, you need to know that your client is who they say they are.
Yeah, I agree. So, doing ID verification absolutely helps in terms of preventing fraud and fraud on your client account, for example. But it's also very useful. It's necessary for 2 reasons, really. Number one, I think it just makes good business sense that you know exactly who you're dealing with. Let's be honest, in the wider context. But also, if you were to have to report suspicious activity to the authorities, you have verified information on which to do so. And number 2 is, if you are undertaking sanction screening or PEP screening checks or even adverse media screening, again, you have verified information on which to do so. So that is the importance of ID verification. But as we've discussed, really the holistic due diligence element of it, the source of funds, source of wealth, background, context to your client, does it pass the smell test? Those are the kind of more AML checks perhaps that you're referring to, and those are important, definitely, or probably of utmost importance in terms of the prevention of laundering the proceeds of crime through your practice. Thank you.
Just to note that the money laundering regulations do state that you need to identify and verify who your clients are. It is one of those "it's the law" kind of situations.
So if you try and go behind the law, why is the law saying that? Well, those are the reasons why.
Thank you for that. Yeah. Johan Higgins asks, groups/friends contribution clubs can be difficult to deal with, whereas often as many as 10 individuals contributing. Any thoughts on those?
Really difficult, and I've seen it quite a few times in Scotland, and indeed, actually, the Law Society of Scotland has a kind of crowdfunding an association FAQ up on their webpage, which goes into a bit of the detail around the due diligence on this. but really tricky. I mean, it depends on the size, the nature, what the funds are being used for. You know, yeah, if it's 10 individuals, and you may be able to do source of funds and ID&V on those. You would need to draw connections between the 10 individuals. You'd need to understand what is the purpose and the context of this. Is it to buy a building to renovate? I've seen it in the context of, say, religious societies buying buildings, etc. There needs to be that background and context. But again, and we've touched upon this perhaps, but if you have to ID&V and do source of funds checking on 200 individuals, for example, to satisfy yourself and indeed the regulatory requirements, there has to be a cost of compliance versus fee income chat there. Yeah. Kayleigh, have you any thoughts on that?
Yeah, I see it quite a lot. Hawala, and so it's a cultural thing as well, where it's how they save money.
Yeah.
And then one person a month gets a lump sum. So it is a really tricky one to do. I think, again, because this is all a risk-based approach, you really need to understand whether or not the firm is happy to be able to that are happy with those sorts of risks. So it's quite important that if something like this does come up and you're a fee earner, that actually you report this up, and you speak to someone about it, because it could be something that the firm says, no, we just don't. It's not within our risk appetite. We don't want to deal with this type of work, which are more than entitled to do. Or it could be that actually it's something that the firm deals with quite a lot, and actually we are happy to do this, and or it's becoming more frequent, and we are happy, depending on the types of clients that you have. So it all goes back to the firm's risks, whether or not the firm's willing to accept those sorts of risks, and then what's the process for that. So again, if it is something that you are struggling with, the firm as a whole really needs to decide, what are we going to do in these situations, and what evidence do we feel like we need, and then like Graham said, is it cost effective for us to actually take this work on, or is it completely outside of our expertise, so it's not something that we want to touch?
Yeah, it's a really difficult one, because no one here wants to deny access to legal services. Yeah, so we understand that, and there's plenty of absolutely legitimate cases where folk kind of get together to buy a building, etc. But again, it's all about that background and context that you need to consider. Arslan, I've put in the link to the Law Society FAQs. One of those FAQs is on kind of crowdfunding, etc. Would you be able to post that for me, please, Arslan? Yeah, thank you.
Done. Guys, thank you for that. Let's go to the next question by Sam Richards. And I shared the link that Graham was talking about on the chat for you guys to have. What's your opinion on formal letters from accountants or portfolio managers? Does that cover the same as getting the original statement reports, or is it purely supplementary?
Certainly can help, absolutely, and especially if that chartered accountant or portfolio manager is regulated for AML purposes. And I think that's certainly something that I would look at. So obviously, chartered accountants, certainly in the UK, are regulated for AML purposes by the ICAW, the Institute of Chartered Accountants in Wales, and ICAS in Scotland. So that certainly helps. It is part of the puzzle. But ultimately, you can't rely on what they say. You can take some comfort from them, but I would certainly still be doing some of my own due diligence on that. Don't know about portfolio managers, by the way. It depends what, but estate agents, for example, probably not what we're talking about here, but they are regulated for HMRC, albeit possibly not to the same extent as the law societies. And Kayleigh, carry on.
Yeah, so it depends on what your policy says as well. So there is a provision within the money laundering regulations that you can rely on another professional's evidence. But I think it depends on what your firm's policy is on that, because a lot of firms will say, no, we don't accept reliance, because if you do accept reliance, then you're also it doesn't matter whether or not it's right or wrong. If it is wrong, you're going to be in trouble still. So I think that's something to consider in terms of what your policy is. I think it is a tricky one. I mean, I work in compliance, so I don't want to trust anyone else. I want to see it all myself.
Right.
I want to see all of the evidence. But again, I think it does go back to what your firm policy is. But in my experience and how I would feel about it, I would probably I'd be the same as Graham. I think it would be a good starting point, but I would want to see something else as well.
I think it's also important to just clarify the Regulation 39 reliance. You can only rely on the verification of ID. So the reliance regulation only extends to being able to place reliance on another regulated professional in the context of identification and verification. It doesn't go on to, you can't rely on other regulated professionals' source of funds evidence, for example, or their holistic due diligence that's specifically in relation to ID&V.
Cool. Thank you, guys. Let's speed up the answers because we have a lot actually.
Well, we've got something to talk about. We love this stuff, Arslan. So.
I love it. I love it, but I'm conscious of time as well.
Lauren, you can also say that if there are burning questions after this, I'm sure Kayleigh and I will try and take on a couple of them and go through you and go back out to the audience.
Yeah, guys, add both of these contacts on LinkedIn, and of course reach out to them directly as well. Lauren asks again, Lauren Lomas Fitzpatrick, does this apply to unregulated work, personal injury, clinical negligence, action against this police? And I believe she was asking this around 15-20 minutes ago when we were talking about source of funds, social wealth.
Okay. Do you want me to go on that, Kayleigh, or do you want to go on that?
Yeah. I mean, it's a simple one, isn't it? Really? No, it doesn't apply to unregulated work. You're being a regulator now, so I'm being the whole like.
No.
You don't have to do it because
yes.
if you fall outside the scope of the money laundering regulations, then no, you don't need to do source of funds, source of wealth.
Yes, I agree. So I do agree with that. Of course, I do. That the work that is being talked about there is out with the scope of Regulation 12 of the money laundering regulations. So it is out with the scope of the money laundering regulations, but the catch might be that it is not out with the scope of POCA, Proceeds of Crime Act, right? So unlikely, look, don't get me wrong, personal injury, clinical negligence, etc., actions against the police, pretty low risk work in terms of money laundering, right? So I get it. But I would still always advise that you have some basic AML policies, including identification and verification, reporting to the NCA, etc., in place. But Kayleigh's right in that work does sit out with the scope of the money laundering regs. Thanks.
One thing that I do say to people when they're splitting out their regulated and unregulated work, that don't forget sham litigation, because it only applies if it's actual litigation. This is when it comes to section 327 and 328. It only applies in the ordinary conduct of litigation. So actually, if it is sham litigation, then you will fall within scope of it. That it will then be an issue.
And I would also say, obviously, I don't know the context of your overall firm, but a client it may be, and I don't know if you do regulated work as well, but in certain situations in other firms, perhaps, someone will come in and do unregulated work, right? And then 3 months later, they might want to purchase a property through you as well, because you've done such a good job for them and you've built up a relationship. And then, of course, it is regulated work. So I don't know if that applies in the context of your practice, of course, Lauren, but that's just something to note as well.
Great. Next question is from Vanessa Stone. How much due diligence do we need to do on OSCR registered charities? For instance, a large contribution to a church building fund where the church is an OSCR registered.
Okay, there is a section on the LSAG guidance on this, on registered charities, etc. I'll be honest, off the top of my head, I don't have the specifics on that. I don't know, Kayleigh, if you know off the top of your head, but I can even put in a line to the LSAG guidance section on that. It's under section 6, client due diligence. Thank you. But no, the bottom line is probably not so much. I don't think it qualifies for simplified due diligence, but if they're OCR registered, you'd hope they can be considered slightly lower risk. Okay, thanks.
Thank you for that. The next question is from Amina Gimba, and she asks, I think technology has made it easy. Can Amiqus carry out a conflict check?
It's not something that we're specifically AML related just now. So no, we don't do conflict checks. But obviously we can tie in with other types of technology that do conflict checks. Thanks.
Thank you. And next question is from Janet, and she asks, on the topic of open source internet search, what is your recommendation on balancing being compliant, example, searching for all the variation of a client's name, and not making it a time-consuming process, and considering the data can be changing on a... Sorry, the rest of the question is not showing up there.
Yeah, and considering the data can be changing on a daily basis, and some data in these open source checks might not be accurate, should these searches be more frequent? Whoa, that's some question, but it's a good question. Certainly, balancing being compliant. So there's two ways of going about this. Obviously, Amiqus do adverse media screening as well. So you can put names, dates of birth into our adverse media screening functionality and get information back. You obviously have to also take what comes back with a pinch of salt. There may be certain publications out there that I would rely on more heavily than others. So you still have to be the judge on whether or not you think something may be accurate, and the corroboration between different sources of information is important as well. Again, you need to go forensic accountant or investigator on this. But you should be looking, in my view, on the kind of second page of a Google search, certainly. So there are ways and means. So the more information you put into Google, for example, if you put Graham MacKenzie into Google, you might get 100 Graham MacKenzies. If you put Graham MacKenzie and my date of birth and my location, if you've got it through ID&V into Google, it will narrow it down and therefore hopefully make it less time consuming too. Kayleigh.
Yeah, I think that technology is a really good way of helping you out with these sorts of things. Like Graham said, because you can place them on ongoing monitoring. So, if something does crop up, you would get a message from the, say Amiqus, and they would tell you that something, there's something about this individual that's come up. And so for me, when it comes to ongoing monitoring of your clients, that's probably the best way for you to do it, and less time consuming. I think the one thing I always get as well is how many pages do I need to go through and what am I looking for? Whereas technology will pick out those bits for you. Again, though, it's about looking at what's relevant. I remember once we did a search, I think it was on Alan Sugar, and he had upset Donald Trump, and there was like a news report on that. So things like that probably wouldn't actually really matter. So it's about what we spoke about before, utilizing your technology, but actually really understanding what source providers are, where they're gathering that information, and is it actually relevant. And that comes as well with really good training for your staff. If they're using technology, to make sure that they really understand what they need to be looking for, what would be potentially a red flag, and what actually is something they don't need to worry about.
That's a really good point. I couldn't stress that enough. I would also say that Amiqus, for example, has an ongoing monitoring functionality on its adverse media screening, so it will alert you if something comes up on key clients. Thanks.
Thank you both. The next question comes from Kelly. And she asks, presumably the same level of ID and source of fund checks apply for charitable donations to charities we administer.
Yeah, apply for charitable donations to charities we administer. Yes, they can do. Obviously, I think the previous question is interesting. They focus on charities. If it's OCSR registered or the equivalent one in Scotland, probably less scrutiny is needed on a risk-based approach. But at the same time, actually, charities, in my experience, unfortunately, especially international charities, and there are plenty of very legitimate, worthy charities out there. Don't get me wrong, right? But they can also be used for terrorist financing purposes as well, and that's something to be considered. So almost the reverse of money laundering is turning clean money into dirty money, as opposed to dirty money into clean money. So it should be noted that there will be further, again, on the Law Society of Scotland's website, there is some information. There's a spotlight on terrorist financing written by a former colleague, Dale Trams, who did a really good job in that. So have a look at that, and that covers charitable donations as well. So maybe have a look at that. Kayleigh, I don't know if you've got any thoughts.
No, I've got nothing to add.
Okay, no worries. Thanks. Okay.
Thank you.
How are we doing time-wise, Arsalan? I'm just conscious, that's all.
Sorry?
How are we doing time-wise? Are we good?
Time-wise, we're good. We still have 85 people watching, and some people have dropped off, no problem. Alta asks, what unstructured data signals offer the most critical early warning for emergent financial irregularities?
Unstructured data signals offer the most critical early warning for emergent financial. Right. Kayleigh, do you want me to go first, or will you go first on this one?
Yeah, go on then. You go first, and I'll have a think.
Unstructured data signals offer, right? So again, it's just, there's a whole load of I think it's section 18 of the LSAG guidance has a whole load of questions and red flags and warning indicators relating to money laundering, depending whether or not you're involved in conveyancing, whether it's TCSP, etc., etc. So please do look at that. It's probably what, the LSAT guidance is 230 pages long, don't get me wrong, right? But it is structured in such a way you can skip to section 18. And it's probably, I would surmise, I've not got any stats on this, but probably one of the least read parts of the LSAT guidance. And actually, there's some real gold in there. So please do have a look at that. And that goes through a lot of those unstructured data signals. But it's stuff like a change in beneficial owner. It's a change in source of funds. It's when you're looking at those bank statements, it's seeing information on there or transactions on there which just doesn't make any sense, etc., etc. Yeah, early warning signs. Yeah, when the client comes in, tells you one thing, and then very quickly changes their mind with no real rational explanation behind it, or 1 minute the source of funds is coming from there, 1 minute it's coming from there, or they're asking you for your client account information straight off the bat. There's a myriad of different things in there.
So many.
One for hours probably on that, but I would, as I say, I would suggest looking at LSAG guidance section 18. Thanks.
I agree. We could go on all day on this one because there are so many. I don't think, we could go on all day for that one because there are so many. But I even as a consultant, that LSAG guidance is my Bible. I refer to it quite a lot. So, and definitely the red flag section is a great section because it breaks it down into clients, it breaks it down into source of funds, it then breaks it down into companies. So you've got all the different ones that you can look at in terms of, could this be a potential red flag? And like Graham said, I think it's one of the least looked at parts of the guidance, which I find the most useful.
Yeah, cool. I just wanted to say, Lauren said thank you in the chat. I would like to say thank you to Lauren for being interactive and asking those questions as well. It's great to get that. So thank you, Lauren. Cheers. Carry on.
Sweet. Ademola, hope I'm saying that right, asks, source of wealth checks are for cash portable goods can be tricky due to their untraceability. What is your view on monitoring cash transactions?
Well, it's high risk, isn't it? Cash is high risk because you can't do that. That's the way that it is, really. So, and I think even I'm sure the Law Society of Scotland and the SRA both say that cash transactions or transactions derived from cash are actually really risky, and I think it's really something that again, it goes back to the firm's whole risk assessment. Is this something that the firm's happy to accept? What are the processes for when this happens, and how do we make ourselves feel comfortable? It could be as much as like we're happy with their story, it makes sense that would happen. Even things like in probate, old ladies who are hiding cash under their beds. Does that make sense? Sometimes it might, but again, it's all about that background story and understanding where the cash, why they've come to have physical cash, because actually nowadays it's not, especially since COVID as well, it's quite rare.
Well, yes, but I would probably add, also that it can be a cultural thing as well, right? So a lot of like as far as I'm aware, there's a lot of kind of Middle Eastern countries, and they wear their wealth on themselves in terms of jewelry, etc. Yeah, and there's nothing wrong with that at all. Or it could be for in some situations, endowments for weddings or gifts at weddings. Folk pass cash, and that is a tradition that has gone on for millennia. Again, it's not about limiting access to legal services, but it's understanding the context, the background, the story around it. Yeah. And does it make sense? Okay. So, but
talking about the weddings, I once helped someone. They actually had a picture of the lady in her wedding dress with all the money pinned to her.
Yeah, well, exactly. I mean, like, so just to give a funny story, like, it wasn't mine. It was something I saw on LinkedIn relatively recently, where someone had taken a photo of them standing by a cash machine with their balance up on the screen as proof of their source of funds. That is not acceptable source of funds. Just for clarity.
I've seen that one.
Unbelievable. But anyway, carry on. I can't claim that as mine or someone else.
Sweet. Just want to say, guys, we're the final question. So if anybody wants to ask Kayleigh and Graham question, you have pretty much like 30 seconds to a minute or two. Ask right away, because we're covering the final question, which comes from Joanna. I hope again I'm saying your name right. Apologies in advance. Our source of wealth and PSC regime applies to regulated scope of work, but non-transactional matters, i.e., leasing, general corporate advisory, etc.
Okay, Kayleigh, you want to go now? And you were going to say a few things on corporate previously.
Yeah. So again, it does generally only tend to fall within work that falls within scope of the money laundering regulations. I'd be careful with some of your corporate advisory,
Yes.
especially it can be quite tricky to know whether or not you've fallen within scope. And the same with leasing as well. If there's money passing hands, then we might not fall within scope of the money laundering regulations, but that's where the Proceeds of Crime Act comes into play. Where we were talking about you can facilitate and you can be concerned in an arrangement. So I think you need to be really careful with those types of work. I think be careful. I know you've mentioned the PSC regime. Actually, be really careful with that, because relying solely on the persons with significant control register at Companies House is not sufficient to for your beneficial ownership information to meet those requirements. Actually, the money laundering requirement regulation specifically states that you cannot solely rely on the PSC when you're dealing with your beneficial ownership evidence. So just be careful with that one, because that's something I see people fall foul of quite a lot. So making sure that you've got other evidence to show that who the beneficial owners are.
Yeah, absolutely. Sorry, carry on.
Sorry, I just had another point. For me, I think that we should be IDing all of our clients. So I think even with corporates, even if it doesn't fall within scope of the money laundering regulations, in the England and Wales, the SRA Code of Conduct 8.1 says that you should be identifying who your clients are. And for me, the only way that you can really do that is by obtaining identification documents for them. So I think just be careful. I see one firm that I know, they have an AML exempt group and then, anti-money laundering has not been thought about at all. We've not thought about the fraud aspects, of us, ended up in sham litigation because the company doesn't actually exist because we haven't checked. So there's loads of different things that you need to be aware of. So I think in terms of if you're, saying, are we regulated or unregulated, still consider actually we want to be making sure our clients who they say they are, not only to keep us safe, but to keep our other clients safe and to keep the community safe.
Okay. Yeah, absolutely. I agree with that. Corporate advice can quite quickly lead into transactional activity. So I agree with what you're saying, Kayleigh. Arslan, before we kind of leave off, I just really want to thank everybody for dialing in. That's been like a good hour and a half of people's time, and everyone's busy. Hopefully you found it interesting. You see a slide up on your screen. Amiqus obviously provide platform in terms of doing your ID&V checks, etc. Please do come and speak to us if it's something that you're interested in. I also provide consultancy training advice, as you'll see in the slide. Kayleigh does too. Kayleigh's been an awesome help when in regards to this, and it's been a pleasure working with her. We've got a load of short LinkedIn videos up on our LinkedIn profiles and through Amiqus, etc. Please do have a look at them. But again, as just an Arslan too, thank you for regulating this as well. So I really appreciate it, and thanks everyone for lending their time today.
Thank you. And any final comments from Kayleigh?
No, well, I think Graham says it all really well. I always have to follow him, don't I?
You don't. So, but thank you.
Thank you everyone for joining. It's been really great. I love talking about this sort of stuff, so it's really nice that everyone stayed on and listened.